When you think about gold, you might think stable or safe. But for the last 50 years, it's been on an absolutely wild roller coaster ride. And its price? Well, it tells a story. It's not just about a shiny metal. It's the story of our entire modern economy. All the fear, all the prosperity. So we're going to unpack this incredible journey, and it all boils down to one big question.
Yeah, what is it about gold that makes its price swing so wildly? I mean, why does it seem to do its best work when the rest of the world is in a total panic? That's the mystery we're going to solve right here, right now.
And just to give you a sense of scale, get ready for this. Back in 1975, an ounce of gold would set you back about $140. Now, fast forward 50 years, and we're looking at projections that blow past $4,300. That leap, that's what we're here to understand.
Okay, so where does this story really begin? It all kicks off in the 1970s. This is the decade where gold was, well, it was finally let off the leash.
The starting gun for this whole thing, an event that's famously called the Nixon shock. See, back in '71, the U.S. just cut the cord, severed the final link between the dollar and gold. Before that moment, gold was just kind of stuck at a sleepy $35 an ounce. But after, whoa. It was unleashed on the open market, totally free to react to whatever the world threw at it.
And boy, did the world throw a lot at it. The '70s were just a perfect storm of anxiety. First, you had this nasty thing called stagflation. That's when inflation is high but the economy isn't growing. Awful. Then, bam, two massive oil crises that sent shockwaves everywhere. And on top of all that, you had all this geopolitical fear brewing. It was this cocktail of chaos, and it sent everyone scrambling for safety.
And where did they run? To gold. The result was a full-blown gold fever. The price didn't just rise, it skyrocketed. It all climaxed in January 1980, hitting this incredible peak of around $850 an ounce. After being stuck in place for so long, gold had just flexed its muscles and showed the world exactly what it could do in a crisis.
But, after a party like that comes the hangover. And for gold, it was a long one. For the next 2 decades, the 80s and the 90s, gold didn't just cool off. It pretty much went into a deep, deep sleep.
So what happened? Well, just look at the contrast here. It's like night and day. The high inflation and fear of the '70s, gone. Replaced by a world where central banks jacked up interest rates to tame inflation. Suddenly, boring old bonds looked really good. And then you had the roaring stock markets of the '80s and the dot-com boom of the '90s. I mean, honestly, who needed a safe asset like gold that doesn't pay you anything when stocks were going to the moon? The scramble for safety? It was over.
And here's a story that just perfectly captures how unpopular gold had become. In 1999, the UK's finance minister decides to sell off a huge chunk of the country's gold reserves right at the absolute bottom of the market. Ouch. The timing was so bad it got its own nickname, Brown's Bottom. That sale outpushed the price down to a pitiful $250 an ounce. It really seemed like gold was a thing of the past.
But then, the calendar flipped. A new century dawned, and with it came a shocking reversal of fortune for gold, all thanks to a whole new series of global crises.
You can see it right here. It's like a drumbeat of anxiety. It starts in 2001 with the 9/11 attacks, which brought all that geopolitical fear roaring back. Then, just a few years later, the 2008 global financial crisis completely shattered everyone's faith in the banks. And we weren't even done. Right after that, the Eurozone debt crisis popped up, threatening to rip the whole euro apart. It was just one crisis after another, and each one was like a flashing neon sign reminding people, hey, this is why you own gold.
And you bet the price responded. At the absolute peak of the fear in 2011, right when the U.S. had its credit rating downgraded for the first time ever, gold just surged. It hit a new record high of almost $1,900. Yep, gold was officially back as the world's #1 asset for when you're feeling uncertain. But hold on. It wasn't just a straight shot up. In 2013, the U.S. Federal Reserve just hinted. They didn't even do anything. They just talked about tapering their stimulus. Just maybe tapping the brakes a little. Well, the market threw what we now call a taper tantrum. And gold? It plunged nearly 30%. This showed us something really important. Sure, gold loves fear, but it is super sensitive to what the big central banks are doing. Okay, so that's the big global story. But running right alongside it is this other journey that is, honestly, even more dramatic. And to see it, we have to go to India, a nation that has an absolutely legendary obsession with gold. Now, look at this because it's wild.
Back in the 80s, remember when the global price of gold was falling? Well, in India, the price in rupees was actually going up. How does that even work? Simple. The currency. The Indian rupee was getting weaker against the dollar. So even as the dollar price of gold fell, you needed more and more rupees to buy that same ounce, which pushed the local price right up.
And if you want to know how important gold is in India, you just have to look at what happened in 1991. The country was on the absolute brink of economic collapse. I mean, they were about to default on their debts. So what did they do? In this crazy, dramatic, last-ditch move, the government literally airlifted 67 tons of its gold reserves and flew them to Europe as collateral for an emergency loan. Can you imagine?
Think about that. At its absolute lowest point, it wasn't some new policy or a promise from another country that saved India. It was cold, hard, physical gold. It became the ultimate financial lifeline.
And for regular people saving in India, this history has meant one thing: staggering returns. Just look at these numbers. Decade after decade after decade, the price in rupees just keeps multiplying. It's no wonder gold is seen as the ultimate way to store your wealth there. I mean, look at the 2000s. The price more than quadrupled. Just incredible.
Okay, this next stat is the one that really gets me. It puts everything into perspective. In 1975, if you had 60,000 rupees, you could buy 1.2 kilograms of gold, a pretty hefty amount. By 2025, that same 60,000 rupees gets you just 10 grams, from over a kilo to 10 little grams. That is just an unbelievable way to see how gold has preserved and grown wealth against the rupee.
All right, that brings us to the final act of our story, the 2020s. And this decade has just pushed gold into a whole new world, smashing every single record we've seen so far.
So what's behind this latest explosion? It's like a recipe that uses every single ingredient we've talked about. You start with the COVID pandemic. That brought chaos and trillions in stimulus money. Then you add a huge dose of the highest inflation in 40 years. Sprinkle in a major war in Europe for geopolitical risk. And the secret ingredient? Central banks around the world buying gold faster than ever before, trying to get away from relying too much on the US dollar. You put all of that together, and boom, gold goes on this explosive rally, soaring to heights we've never seen. We're talking peaks, with some people thinking it could blow past $4,300 an ounce. It's just cemented its role as the asset for our modern, very uncertain world.
So, here we are. After this wild 50-year ride, what do we make of gold? Is it just a barbarous relic, like some people say? An old-fashioned rock with no real use? Or is it the ultimate, battle-tested safe haven for when everything else goes wrong? You know, looking back at the last 50 years, the answer is probably, yeah, it's both.
Yeah, its price is always going to dance to the music of fear and prosperity. But what this whole journey really shows us is that gold's fundamental appeal, that shine, both literal and financial, it's just as powerful today as it was thousands of years ago. And that probably isn't going to change.